Good afternoon. Today is Monday, March the 25th, 2024. So after a week overnight session, this is the overnight. This is today's session. The market opened up with a 12-point gap lower. After a small correction of overnight inventory, prices advertised lower looking for buyers. We crossed the open several times before buyers stepped in and we auctioned higher to close A period. B period again auctioned lower, but found buyers at A's halfback, leaving 18 ticks of excess at the lows. It was obvious at this point that volume was very poor. We finally took the IB high in J period and extended that by 2 ticks in K period to leave a weak high 1 tick below the previous low a day, a very mechanical level. This led to an inventory correction in L and M period as we traded through some of the excess and the open to close the day near the lows. I want to bring in my write-up from today, from this morning. The CDS has been trading mechanically since FOMC last week. In this week, we have more Fed speakers and inflation data, including PCE on Friday, when equity markets are closed. We're in an uptrend on the monthly and weekly time frames, but we're in a balance on the daily and positioned for a gap lower in the overnight. Keep in mind I write this sometimes a couple hours before the open. I'm often more cautious on Mondays and more so when the market is giving conflicting information. And by that I mean the fact that we're uptrending on the monthly and the weekly, but we're trending down on the daily time frame. Although an open outside of the previous day's range does provide more value. So 2 of my scenarios kind of came into play today at the same time, and I'll explain that here. So scenario 1, look for continuation of the one-time framing down on Friday and in the overnight session. Overnight inventory is 100% short, and we could provide a move up at the open, so I'll be looking for a lack of acceptance of higher prices and or an inability to fill the gap. So you can see today we were 1 tick shy of filling the gap. So the first level I was paying attention to, that I was most excited in trading, is the 52.89 to 93 gap fill. So 89 was a prior low day. That was where I was interested in getting short. But then 93 was also the previous settle. So my opinion was that anywhere in this area, the short would still be a safe bet. This has the opportunity for a very large move down. So I will allow more room for this trade to work out. Excuse me. 52.67 to 71, the singles from Wednesday's FOMC reaction, and also 2 sigma down. So that was a level here. We couldn't quite get to that point. So I'll ignore the rest of these levels because we didn't trade through that one. Scenario 2 was if we had an inventory correction with follow through, with new buying. That didn't occur. Scenario 3, we get a low value rotational day. This is harder to put firm levels on, but can be monitored by watching how value develops. So to stop right there, we saw an A period and B period where we put the IB in. We had value essentially in the middle of this profile. But once C came in, we started building value in this part of the distribution, and that's where the value stayed the entire rest of the day. So value was not developing, which would lead to the opinion that it could be a rotational day. And on days like that, we'll often see price spikes below, and we can look for those to mean revert back into value. We will also have tapering volume at the highs and lows with price probes that get quickly rejected. I will likely sit this out. So we didn't really get much of that today with the exception of this poor low that we got here. And that wasn't even really a good example of that because this was just such a small range. So this this day was extremely low value, and we traded at mechanical levels again today. We crossed the open several times, and when we auctioned higher, we came back down in B period, and you saw buyers step in exactly at the midpoint of A period, very mechanical level. We also see, let's see, we can go to the letters to make this a little bit easier. We also had a poor high in E period. We had a poor low in H period. We had just 2 ticks of excess and a weak low at the previous low a day. So very, very mechanical levels. Volume on the day was only 650,000, the lowest that I've seen it in at least a year. Horrible volume. It's like rollover volume or holiday volume. And someone mentioned today that it's holidays and East Coast, northern part of the country. So I didn't think about because I'm down here in South Texas where spring break and everything's already done. So that could very possibly be this reason why we don't have any value or any volume this week. Range was 15.5 points, which is horrible. And Delta was plus 800, which is basically flat for the day. We did lower value for the day. We did 1 time frame down. We have an 11 wide POC. So, indicative of a very rotational day. It's a very wide level. So that's a level that will be on the price map come tomorrow. Some of the things we couldn't do, we couldn't trade back to the settle. Excuse me, get a drink. We couldn't trade back to the settle, and we couldn't fill the gap. We were 1 tick shy of filling the gap. Put in a weak high, and we couldn't get the weak high either. I don't really have much more to say about this day. We don't have to trade ES every day. That's the one thing. And there were some indications that ES might not be very tradable today because of the last 2 days. Thursday and Friday were very low volume as well. I did mention 4 other markets in my write-up this morning on Substack, and one of those was Bitcoin. So micro Bitcoin traded up 11% on the day. Crude was another one. I was looking for crude above Friday's high. The whole energy complex looked good today. So crude was up 1.6%. Not a lot, but it looked like a pretty clean move once we got above those highs. Gold was another one I was interested in. It just looked above and failed. So that's also a trade setup if that's something that you trade. But, all these setups were looking at areas where I expected to be able to get some kind of a trade on. And then copper, which is something I've never traded, but it looked like it might have a good setup, and it never did. It never did get set up. So that's where we're at today. Looking forward tomorrow. I can't really see how there's going to be a lot of value tomorrow. I'm somewhat expecting that we might get a pretty decent gap down tonight because we've moved down the last couple of days and we're still not able to find buyers. So let me just remove the overnight session. So we gapped down Friday and we gapped down today. We still can't really find buyers. We have a little bit of excess at the lows, but not a whole lot. And volume was so ridiculously low that I think there's an opportunity that maybe we gap down tomorrow. And my what I'm looking for whenever we do have a gap down, the reason I said that I'd be interested because we're opening out a range is because we can see 2 things that become very tradable. One of those being an inventory correction, which might find follow-on buying, which gives us a good opportunity for a long, or liquidation. We might get to the point, for example, if we get back into this balance area and below this FOMC reaction, there's going to be a lot of people that are wrong. So if we can get a decent gap down and a good enough gap down that people are going to have to cover their longs, so we get an extension, we get a continuation of the move down, then we could see a really good move. We could see a trend day down, and that's definitely something I want to stick around for. At least I want to be watching for. Or on a good enough gap down, we could get an inventory correction that leads to follow-on buying, where we finally find those buyers, and then we do make a run back up for the highs. We could see a trend day up as well. So that's why, even though volume is so poor, I know ES very well.
The hour, 5 minutes from now, looking out for South Korea consumer sentiment for March.
All right, sorry about that. Nobody cares about South Korea consumer sentiment. But anyway, so I think it's still worth paying attention to ES. At least the next couple of days. We do have PCE coming up Friday. So if there's any indications that that number may be changing from what the expectations are, then we could see some trade. We still have geopolitical risk in Ukraine and the Middle East that could lead to some good opportunities. And you just never know what else could present itself. That's all I have for today. Like I said, all of my write-up is free on Substack. I have the link to it in the YouTube video or in the comments in the YouTube video. And I appreciate it. Y'all guys have a good night, and we'll see you in the morning.